This LOS is describe types of investors and distinctive characteristics and needs of each. Investment clients. The types of investors covered in this reading are 1. Individual investors, 2. Defined benefit pension plans, 3. Endowments and foundations, 4. Banks, 5. Insurance companies, and 6. Investment companies. The types of characteristics that we're going to look at are time horizon, risk tolerance, income needs, and liquidity. In general, the longer the time horizon, the higher risk tolerance. And also, in general, less liquidity, the higher the risk tolerance. Note for defined benefit pension plans, it equals low liquidity, which is a little bit surprising because defined benefit pension plans pay out pensions every month, but it's still considered to have relatively low liquidity relative to the size of the assets. We'll now look at the different characteristics such as time horizon, risk tolerance, income needs, and liquidity needs by investment client type. So for individual investors, as you would expect, the time horizon varies by individuals, as does the risk tolerance, income needs, and liquidity needs, because people are very different. It's not a homogeneous group. But with regards to defined benefit pension plans, the time horizon is typically very long term. The risk tolerance is typically high. The income needs is high for mature funds, low for growing funds, and the liquidity needs is typically quite low. Okay? Endowments and foundations, very long-term time horizon, high risk, so a long time horizon, which translates to a higher risk tolerance. Income needs, they have to meet the spending requirements, and liquidity needs typically quite low. If we look at banks, the time horizon is very short term, the risk tolerance is quite low. The income needs is to pay interest on deposits and operational expenses, and the liquidity needs is high to meet repayment of deposits. Insurance companies, it's different time horizons, short term for property and casualty, long term for life insurance companies, so that's something to be aware of. Risk tolerance is typically quite low, and the income needs is typically quite low, but the liquidity needs is high to meet claims. For investment companies, again, the time horizon is going to vary by fund. So if the time horizon is going to vary, so will the risk tolerance, as do the income needs, and the liquidity needs, however, is high to meet redemptions. So we're just going to finish this LOS with 3 quick practice questions to check our understanding. So the first one, in general, which of the following institutions will most likely have a high need for liquidity and a short time horizon? A, banks, B, endowments, or C, defined benefit pension plans? So the correct answer is A. Banks have a short-term time horizon and high liquidity needs. So I put these questions just to show the importance that you really have to understand the individual characteristics of each investor type based on that chart that we saw 2 slides ago. So another practice question which is quite similar. Which of the following types of institutions is most likely to have a long investment time horizon and a higher level of risk tolerance? A, bank, B, an endowment, or C, an insurance company? The correct answer to this one is B. Endowments have a long investment time horizon and a high level of risk tolerance. Finally, down to the last practice question for this LOS. Which of the following institutional investors are most likely to have a low tolerance for investment risk and relatively high liquidity needs? A, insurance company, B, charitable foundation, or C, defined benefit pension plan? A is correct because insurance companies need to be relatively conservative and liquid given the necessity of paying claims when due. So that's the last slide for this LOS. Thank you.